$41 used to be impossible for Palantir, but they just broke this strong ceiling, and now people are celebrating. However, there are some who are giving warnings about Palantir. It could all go down crashing any time. But what they don't know is that Palantir has something up their sleeve, a potentially huge partner who's now sitting on $277 billion in cash could be coming their way. But is this really happening? Where will Palantir go from here? Well, let me explain. Disclaimer. Palantir fans and investors have been rejoicing because of the latest achievement the company made in the stock market. This was such a difficult price to break. On the other hand of all the celebration is the question of where Palantir could go now, and what would be the implications of this huge growth. There are several opinions on this, so stay tuned and hear me out. For short-term swing traders, this surge presents an opportunity to lock in quick profits. They might see this as a good time to capitalize on the excitement. However, long-term holders could feel differently. They may prefer a more gradual rise, with less volatility and hype. Stability over time is what they are after, rather than sudden spikes that could unsettle the stock's growth. But this is just the beginning. To most people, Palantir's growth looks like something that brings danger to their investments. And what's worrying is that they just might be right. There's some truth to what they're saying. First off, some investors aren't too focused on Palantir's upcoming Q3 earnings. It doesn't matter to them whether these numbers would be good or not. They're only looking at one thing. They argue that the stock isn't worth 100 times its next 12 months' earnings per share. And as you may already know, Palantir is at this level already, basically saying that their stock is too expensive versus what they're earning. In some cases, people see the company's long-term future as incredibly bright. They're looking at growth likely to continue at 24% for the next 5 years. But here's the catch. There's still some heavy hesitation. The fear is that when earnings are released, reality might catch up with the market, causing a significant shift in sentiment. And with 100 times stock price versus their actual earnings, you can already imagine what would happen to Palantir's stock if this growth all crashes down. So is it really the end of Palantir's run? Right now, Palantir looks poised to reach its all-time high of $45, according to some users on X. But many investors are waiting for a much-needed pullback before adding to their positions. While they see Palantir as a core stock in their portfolios, they're hesitant to buy more shares at these elevated prices. They'd rather wait for a reasonable entry point, focusing on value over hype. And here's what's even more concerning. There are diehard Palantir fans who believe in a specific theory. They say that whether a stock is undervalued or overvalued, it will always return to its fair value. According to this view, the market acts as a weighing machine, eventually balancing out inflated or suppressed prices. And if this comes from the mouth of Palantir fans, you already know that these negative views of their stock price isn't made out of hate or disbelief in the stock. It proves that the skepticism around Palantir's valuation remains high. With a market cap nearing $96 billion, a price-to-earnings ratio of 243, most investors see it as absurdly overvalued. So much so that they want people to basically steer clear of Palantir. The fact that the company's net income sits at only $400 million reinforces the belief that Palantir's current price doesn't align with its financial performance. They point to the stock being driven by endless optimism, and they might just be fueled by the market's constant stream of green days and boosted by liquidity from the Federal Reserve's quantitative easing cycles. Overall, while Palantir's growth potential is undeniable, many feel that its current valuation is stretched. The stock may be headed for a pullback, which could serve as a reality check for both the company and its investors. But all is not lost. Palantir is still cooking something up. They just dropped a huge bombshell that shocked everyone. And out of this news comes speculations of a potential partnership of Palantir and a huge name in the investing world. Hear this out. In a recent interview with CNBC, Palantir's CTO, Shyam Sankar, made an exciting announcement. He revealed that Palantir has partnered with a major U.S. insurance company to bring a groundbreaking change. Sankar said that they've automated all of their insurance partners' underwriting. And here's what's crazy. What used to take 2 weeks can now be completed in just 3 hours, thanks to Palantir's 78-agent AI model. This is a huge win for Palantir. Not only does it showcase their ability to solve complex problems, but it also highlights their growing influence in key industries. The insurance sector is a massive market, and being able to dramatically speed up processes like underwriting could lead to more partnerships. This performance boosts confidence in Palantir's technology and its ability to transform traditional industries. For investors, this news shows that Palantir isn't just about defense contracts anymore. They're expanding into other areas, with real-world applications that can create massive efficiency gains. If Palantir continues to deliver these kinds of results, it will strengthen their position in the market and give them a competitive edge. But this is just the tip of the iceberg. Something even crazier could happen to Palantir. A post on X has shared their speculations that if this huge insurance company that Palantir partnered with is Geico, it could spell a huge payday for Palantir and its holders. Why so? Well, Geico is owned by none other than Warren Buffett. And if Palantir is partnered up with Geico, there's a huge chance that Warren Buffett would help push Palantir's stock price up. These are all speculations at this point, but let's entertain the potential for now. Warren Buffett buying Palantir stock isn't an entirely impossible scenario. After all, he's not against big data companies. Remember, he sold all his Snowflake shares. If Palantir continues to show strong results and expands its reach, it could attract Buffett's attention as a solid investment. And here's what is even more insane. Warren Buffett's Berkshire Hathaway is sitting on a record $277 billion cash pile after a recent selling spree, including unloading its Snowflake shares. This creates a significant opportunity for Palantir if Buffett decides to buy its stock. His reputation for investing wisely could bring instant credibility to Palantir. If Buffett were to make a move, it could lead to a surge in Palantir's stock price. Many investors would likely follow his lead, believing that his endorsement signals confidence in the company's future. This influx of interest could drive demand, pushing the stock higher. Additionally, it might attract more institutional investors who respect Buffett's judgment. They could see Palantir as a solid investment given its partnerships and innovations in AI. Overall, Buffett's involvement could transform Palantir from a speculative stock into a more established player in the market, boosting its long-term value. But this isn't just what's in store for Palantir's future. We're also seeing a pattern of money moving out of foreign markets. And this is another opportunity for Palantir. Recently, Hong Kong's Hang Seng Index has fallen 6%. This is the worst level it's at since 2008. This decline follows a disappointing stimulus press conference from China, leaving investors anxious. With uncertainty in the Chinese market, it's only right that Palantir's stock is seeing a significant rise today. Money is flowing out of China, and investors are looking for safer, more promising opportunities. And if they see Palantir as a good place to put their money in, then it's going to be a huge push for the company. Another user on X has also noted that Palantir's price movement could be heavily influenced by Wall Street. This is because Wall Street typically makes such moves when they anticipate a super sales cycle is on the horizon. Analysts spend their days calling companies and doing extensive checks. They could be hearing strong signals about Palantir being the only game in town for enterprise AI. This unique position in the market can create a robust demand for Palantir's services as businesses increasingly adopt AI technology. These updates can have a positive impact on Palantir. With the drop in confidence in Chinese markets, investors may turn to U.S. companies like Palantir that offer innovative solutions. The increased interest could lead to higher stock prices and greater market stability for Palantir. As companies look to enhance their operations through AI, Palantir stands ready to capture this demand. Moreover, if analysts continue to promote Palantir's potential and its strong market position, it could lead to a wave of new investments. This influx of capital can further strengthen the company, enabling it to expand its capabilities and services. Overall, these factors position Palantir well for growth, especially in uncertain times. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video. And don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.